Welcome to the deep dive. Today, we're cutting through the noise, getting you informed quickly on what really shaped the financial world this past Friday, July 18th, 2025. We've got the Lotusbee Market Digest here. It's known for its predictive analytics, and, well, it's showing some fascinating shifts.
Absolutely. Our mission today is really to pull out the most important nuggets from these sources. We'll explore the mixed signals we saw in the market, try to uncover the surprising factors that moved indexes, specific stocks.
And even crypto, right?
And even the crypto landscape, yeah.
Okay, so let's unpack this. After a week of rallying, the markets ended. Well, kind of mixed, didn't they? What's the initial read here?
Yeah, it was definitely mixed. We saw the NASDAQ composite. It continued its record run, but it was nearly flat, up just 0.05%, around, 20,895, so holding strong.
Okay.
The S&P 500 was pretty much the same story, almost flat, around 6,297. But then you look at the Dow Jones Industrial Average. That finished down 0.32%, roughly 342.
Right.
And the Russell 2000, the small cap index, that fell too, down 0.60% to around 2,240.
And the VIX. Any major jumps in volatility?
Surprisingly calm, actually. The VIX stayed around 17, so no real panic despite the divergence.
Interesting. So those numbers paint a picture, but they don't really tell us why. What were the big forces pulling things in different directions?
Well, the market definitely seemed to pause because of new trade uncertainties, specifically those tariff talks about Europe that were bubbling up.
Ah, okay. Trade worries again.
Exactly. That tended to cool off what we call risk appetite, made investors a bit more cautious. But on the other hand, you had optimism around the upcoming earnings season. Plus, Treasury yields are pretty stable, holding around 4.46%. That helped keep the broader indexes like the S&P and NASDAQ somewhat elevated.
So a real tug of war, though.
A real tug of war, yeah. Between trade fears and earnings hope.
Yeah. So moving beyond the big indexes, the real action is often in individual stocks. Let's dig into the standouts, both the winners and the ones that stumbled.
Sure. Among the S&P 500 gainers, Charles Schwab at CHW, that surged nearly 3%, up to 2.9%. Really strong Q2 earnings reported there, and good trading volume growth.
Okay, good news driving that one.
Yep, and Norfolk Southern, NSC, that jumped 2.5%. That seemed to be driven by speculation.
Yeah.
A potential Union Pacific bid. Classic M&A buzz.
Right.
And Chevron, CVX, ended up just 0.5% or so as its deal to acquire Hess moved forward. Pretty much expected.
Okay, so those make sense. But the digest also highlighted some declines that seemed counterintuitive.
That's where it gets interesting. You look at Netflix, NFLX. It dropped 5.1% after reporting earnings.
Even though the results were strong.
Exactly. And American Express, ASP, fell 2.6%, again, despite beating expectations. It really highlights how, sometimes good news just isn't good enough if expectations are incredibly high. Perfection might already be priced in.
That's a key point for listeners, isn't it? Even good news can trigger a sell-off if it doesn't absolutely blow estimates out of the water.
Precisely. It pushes you to look beyond the headline number at the underlying value. Meanwhile, 3M, MMM, that got hit by those tariff concerns we mentioned, down 3.7%. And interestingly, Netflix, Amex, and Schwab were also the most active stocks, volume-wise, because their earnings reports were so impactful, even with the mixed reactions.
Okay, that makes sense. A lot driven by earnings this week. But what about outside traditional stocks? How did crypto and commodities fare?
Right, shifting gears. Crypto actually saw continued momentum. Bitcoin was pretty steady, holding around $118,000. Big factor there was the House passing the Genius Act.
Ah, yes, the regulatory clarity bill. Senate vote's still pending, though.
Still pending, yeah. But the House passage was seen as a positive step. And you saw Ethereum, ETH get a nice lift from that, up 4%, directly tied to that crypto-friendly legislative move.
And the crypto stocks followed.
They did. Coinbase, MicroStrategy.
Yeah.
They generally track that positive sentiment. In commodities, oil, Brent crude specifically, rose to around 67.68 a barrel, partly on deal optimism, like the Chevron Hess deal, and partly just ongoing economic resilience.
Okay. And gold, copper.
They also edged up a bit, modestly. Suggests there's still some underlying caution, some lingering risk perception in the broader market.
So pulling it all together, what's the main takeaway for you, for our listeners?
Well, this week really showed that clear divide, didn't it? Tech and crypto seem to hold up well, buoyed by good news, positive earnings surprises in some cases, and that regulatory progress for crypto.
Right, but the broader market felt the pressure elsewhere.
Exactly. Trade uncertainty, especially those European tariff talks, definitely put a damper on general risk appetite. That's likely what pulled down the Dow and the small caps in the Russell 2000.
And connecting this to the bigger picture, that Lotusbee view you mentioned.
Yeah, their view really emphasized that crypto momentum, particularly how it's being fueled by U.S. regulatory progress, like the Genius Act. That's a key theme you need to monitor. It shows how legislative actions, even just proposals, can really move entire sectors. Sentiment can shift fast.
Definitely a lot to think about there, that interplay between policy, earnings, and global trade. Well, that wraps up our deep dive for today. Thanks for joining us.